Ever wondered what an index is and why it plays a crucial role in the financial market? Let's dive in. An index in simple terms is a statistical measure that represents the performance of a group of assets or a section of the market. It's a key player in financial decision-making, serving as a benchmark that measures the health of the economy, the performance of investments, and even the success of trading strategies. So an index is more than just a number, it's a key player in the financial market. Now, onto index funds. These are the heart of ETFs. But why is that? The role of index funds is to replicate the performance of a specific index, like the S&P 500 or the Nasdaq. They aim to match, not outperform, the market. This passive investing strategy provides diversification, spreading risk across a broad market, and typically comes with lower expense ratios. So it's like getting a slice of the whole investment pie, rather than betting on individual ingredients. In essence, index funds are the engine that powers ETFs. Please remember this video is merely for educational purposes and is not a substitute for professional financial advice. With that out of the way, let us get back to the content. Indexes are as diverse as the markets they represent. Let's explore this variety. At one end we have broad market indexes like the S&P 500, which covers a wide range of companies and sectors. Then we have sector-specific indexes that focus on particular industries such as technology or healthcare. And let's not forget thematic indexes, which are designed around specific themes like renewable energy or e-commerce. So as you can see, indexes provide a spectrum of investment opportunities. But how do index-based ETFs function? Let's uncover the mechanics. At the core, these funds are designed to mimic the performance of a specific index. They do so by buying all or a representative sample of the securities within that index. When the index changes, say due to market fluctuations, the ETF adjusts accordingly in a process known as rebalancing. This ensures the ETF stays true to its benchmark index, offering a snapshot of its performance. And that's the science behind how index ETFs work. Index ETFs offer several advantages. Let's highlight why they are a popular choice for many investors. First off, they provide diversification. By mimicking broad market indices, investors can spread their exposure across numerous sectors and companies. Secondly, index ETFs are transparent. With daily disclosures of their holdings, investors know exactly what they own. Lastly, they're cost-efficient. Due to their passive management style, these funds typically have lower expense ratios than actively managed funds. These benefits make index ETFs an attractive option for many investors. While index ETFs have their advantages, it's important to be aware of potential risks. Let's delve into these aspects. Index ETFs, like any investment, come with a degree of risk. Market volatility can impact the value of your investment. Also, while index ETFs aim to track a specific index, there's no guarantee of perfect replication. Lastly, remember that diversification in index ETFs doesn't guarantee profit or protect against loss. Being aware of these considerations and risks will equip you to make informed investment decisions. To solidify your understanding, let's take a look at some real-world examples of index-based ETFs. Consider the S&P 500 Index ETFs, which aims to replicate the performance of the top 500 companies in the United States. On the other hand, the Technology Select Sector Spider Fund reflects the tech sector's performance. Meanwhile, the Global X Robotics and AMP Artificial Intelligence ETF focuses on a thematic index, investing in companies at the forefront of robotics and AI innovations. These examples illustrate the diversity and potential of index-based ETFs. We hope this video has helped you understand the connection between index funds and ETFs. By now, you should grasp how these financial tools work together to offer diverse investment opportunities. Thank you for joining us on this educational journey. Stay tuned for more insights into the world of finance. See you on the next video.